So let me start it. Very good afternoon to all of you and welcome to today's discussion on tax audit. This is the second video, a second live discussion on tax audit. First discussion which we did was, earlier, and we had a discussion on when tax audit is applicable. That is 44 AB, 44 AD, 44 ADA, all those sections we discussed. And today is the second live discussion in our tax audit series. And we are starting with two new clauses. The first clause is 30C, which talks about reporting of GAR. And the second clause is clause 44, which requires tax auditor to give details of certain GST transactions. So my duty is to make you comfortable with clause 30C as far as possible. Whereas my friend CA and advocate Gaurav Gupta, who would be joining us shortly, he will make us understand clause 44. This discussion is streamed live on the YouTube. So if you want to watch it again, you can visit my YouTube channel and watch this discussion there. So now, without wasting further time, let me share my screen and let me start discussing the clause 30C. I trust my screen is visible to all of you. Is my screen visible? Can somebody confirm on a chat box or?
Yes.
Thank you. Thank you, Prince. Thank you, Radhika. Okay. So when I first went through clause 30C, probably like everyone, I also felt panic that, the GAR, which we generally call it journal entry avoidance rule, are not easy. They are quite complex. And generally we say GAR is a last resort provision available to tax authorities for the avoidance of tax. And if you see the sequence of GAR provision, it comes under chapter 10A, and even it is after chapter 10, which is on transfer pricing, and before that you have all the provisions relating to computation of income. So you have chapter of salary, chapter of house property, chapter of business or profession, capital gain, other income, and then you move on to chapter 10A, which is journal entry avoidance rule. So if if you are doing something legal which is as per the provisions of the act, still GAR can hit you. So the wordings, if you focus on GAR, it says journal entry avoidance. And we all know that in tax, there are three things. One is tax evasion, second is tax avoidance, and third is tax planning. So we'll try to understand the difference between these three terms, where GAR is applicable, quickly going through the tax provisions which are there in chapter 10A, some relevant provisions of chapter 10A, and most importantly, the guidance note of ICI, what it talks about clause 30C, what guidance it is giving to the auditors. I wish to highlight, being the focus is on clause 30C from the perspective of audit and not from the perspective of chapter 10A. So I would not be going in detail as far as chapter 10A is concerned, because talking on GAR need almost 2 to 3 hours on a minimum side. And the idea is to make you comfortable with 30C more rather than the GAR. So if we see clause 30C, it says whether the assessee has entered into an impermissible avoidance arrangement as referred to in section 96 during the previous year. If you give yes or no, then if you say yes, you need to give the following details. If yes, please specify nature of impermissible avoidance arrangement and amount in rupees of tax benefit in the previous year arising in aggregate to all the parties to the arrangement. If we just stick to this slide, and if we just read the last line, amount of tax benefit in the previous year arising in aggregate to all the parties to the arrangement. So the question, the first question which comes to our mind is, do we have privity or do we have access to look into the details of all the parties to the transaction? So you have been, appointed by one taxpayer. So that taxpayer is giving you the access to his books, and there could be impermissible avoidance arrangement, or let's say call an arrangement wherein let's say 5 parties are involved, 5 different taxpayers are involved, but you have got access to only one set of books of accounts, the books of accounts of only one taxpayer. So that's make this clause really challenging, the reporting in this clause really challenging, and apparently out of the scope of a tax auditor, that if you are reviewing one book, the books of one taxpayer, can you actually comment on point number 2, because you do not have access to the books of accounts of all other parties to the arrangement. So with this, small backdrop, let me move ahead. If I read clause A says whether the assessee has entered into an impermissible avoidance arrangement as referred to in section 96 during the previous year. The conditions are entered into an agreement or arrangement during the previous year. So if we are doing the tax audit for assessment year 22-23, then we need to look into the arrangements which are entered during previous year 21-22. Though the guidance note has got a different view on this, but if we simply look into the clause simply says whether the assessee has entered into an impermissible avoidance arrangement as referred to in section 96 during the previous year. So the question comes, what about the continuing arrangements? So let's say the taxpayer has entered into an arrangement during financial year 19-20. And from that arrangement, there are transactions which are going on in 21-22. So do we need to report those transactions? Because clause A only talks about whether you have entered into such arrangement in the current previous year or not. It does not talk about during the previous years or previous year or immediately 3 years preceding the previous years. So one may take a view that one needs to only report transaction for the arrangement for the current year, that is for financial year 21-22. if you are able to identify any impermissible avoidance arrangement with the taxpayer has entered in 21-22, that is only needs to be reported. If that is not the case, then certainly one can avoid clause A. One can simply say no, the assessee has not entered into any impermissible avoidance arrangement during the previous year. But I'm highlighting the guidance note has got a different view, and we all need to go by what our guidance note is mandating to us. Now, but before we start reporting, we need to appreciate what is impermissible avoidance arrangement and what is Garg. So provisions relating to GAR are given in Chapter 10A of the Act, read with rules under subpart DA, application of general anti-avoidance rule of the part to determination of income. So basically, general anti-avoidance rules, or in short GAR, helps in determination of income. GAR is a codified tax provisions which gives a tax authority the broad power to strike down unacceptable tax avoidance practices that would otherwise are legal. So often you will see the news channels or the news reports or the tax reports which talks about legal but not ethical. So GAR is such a provision which strike downs your arrangement which are legal. So you have tried to use a law, and you, as per law, you are working, but the somewhere you are hitting the spirit of law. You are not following the spirit of law. So when we are not following the spirit of law, but we are still following the law, we call it as a tax avoidance. So it is not illegal. It is something which is very much legal, but it may not be the intent of the law. So for example, let's say, the investments have been routed through a country, wherein the DTA, double taxation avoidance agreements, provide a lot of benefits. And but the investor originally does not belong to that country, and in order to take benefit of treaty of that country with India, he just did treaty shopping, or he routed the investment through that country. So now in such a case, that transaction, that investment is very much legal, but is not as per the spirit of the agreement. The idea is to give boost to that economy. So if any genuine investment is coming from that country, that investment should get the tax benefit, and not the investments which are coming through treaty shopping. So under the BEPS provision, also base erosion and profit shifting, which was the project taken up by OECD, lot has been done to avoid or to protect the tax bases, and treaty shopping is certainly one of the loophole which BEPS try to plug in. Similarly, the India has introduced general anti-avoidance rule, which is sort of a very specific but very general, a law which will going to hit out all those legal transactions which are not as per the spirit of law. And one of the objective, or the main objective of such arrangement, is the tax avoidance. So as I said, tax avoidance means use of legitimate and legal methods to reduce tax liability, which are not in line with the intent of the law. There are other two terms, tax planning and tax evasion. So tax evasion is use of any illegal method to reduce the tax liability. So all those fake invoices that are coming, for your review, they are basically tax evasions and not tax avoidance. So that will not fall under GAR. And then we have a tax planning. For example, if you make an investment, you get deductions, certain investments, you get deductions. So all those investments which you are making is basically falling under tax planning. Or for example, let's say, the government comes up that if you are setting up a manufacturing unit in a particular area, you will get a tax benefit. And then you are going and setting up a manufacturing unit in that area, you are getting a tax benefit. So it is tax planning and not tax evasion or tax avoidance. So it's not tax planning, it's not tax evasion, but it is actually the tax avoidance which will come under the general anti-avoidance rule. So let's see section 95. Section 95 says, 95 of the Act says, notwithstanding anything contained in the Act, so it has got an overriding feature, an arrangement entered into by an SSC may be declared to be an impermissible avoidance arrangement, and the consequence in relation to tax arising therefrom may be determined subject to the provisions of this chapter. This chapter shall apply in respect of any assessment year beginning on or after first day of April 2018. So technically speaking, if one has entered into uh, arrangements of before 1st April 2018, the provision of Chapter 10A may or may not apply is a big question. So we have, clarification from the CBDT that, the grandfathering is allowed wherein the investments are made. So not on every arrangement, but yes, on specific arrangement, on some certain arrangements, one get the benefit. And those arrangements are primarily in relation to investments and the income which may arise from the transfer of those investments. But other than investments, in my view, the one may not get covered for other arrangements. What are impermissible avoidance arrangement is given in section 96. It says an impermissible avoidance arrangement means an arrangement, the main purpose of which is to obtain a tax benefit. So the main purpose is to obtain a tax benefit. So whatever the arrangement or the agreement or the transaction, whatever one is doing, the prime purpose is to avoid tax. And what it is doing, it is creating rights or obligations which are not ordinarily created between persons dealing at arm's length. So for example, if in an arm's length, if you will deal, generally your price will reflect the terms and conditions set out in the market. So many a times what happened, that you, in order to take the benefit of some of the section, let's say 115 BAB under the Income Tax Act, wherein the rate is 15%, you have set up a new manufacturing company which is doing the manufacturing operations. Whereas, all the intangible rights or the intangible property is lying with another company. And that unit, that manufacturing entity is being shown as the entrepreneur unit, and most of the profits are shifted to that manufacturing entity in order to get the benefit of reduced tax rate, that is the 15% tax rate. Whereas, in particular, the risks belong to the another entity, let's say the entity which is into selling. So now I'm paying the higher price to the manufacturing unit, but the rights and obligations, if you see, is more with the marketing unit. So this generally does not happen in the arm's length scenario. So this type of situation will fall under the GAR in section 96. Results directly or indirectly in the misuse or abuse of the provision of this act. So again, a very wide wordings. Lack commercial substance or is deemed to lack commercial substance under section 797 in whole or in part. So sometimes, when clients comes to us that they want to set up a unit in a foreign country, let's say, SEZ in the free trade zone in UAE, which will primarily be involved in managing the purchase and sale. But the substance in that unit is missing. We do not have people, we do not have resources, and now the goods are shipped directly to Europe, but via that entity in UAE, and the transactions are routed only on the papers. And there also could be, some accommodating person. There could be third party which says, we will save your tax. If you will route transaction through us, you will come out from the transfer pricing provisions in your country because we are not your related party, and you can ship the goods to us and we will ship the goods to Europe. So we will charge some fee, maybe 1% of the total transaction value, or maybe 1.5% of the total transaction value. And you can shift profit to UAE, and then we will invest interest. So a lot of all these vehicles, all these, agreements you keep on hearing, they will come up with some type of arrangement or some type of tax avoidance mechanism. So all those tax avoidance mechanism wherein the substance is missing will fall under chapter 10a, that is section 96 of chapter 10a, lack commercial substance or is deemed to lack commercial substance under section 97. Is entered into or carried out by means or in a manner which are not ordinarily employed for bona fide purpose. So whether the agreement is for bona fide purpose or not, again, is something which needs to be seen. So if any of the condition is satisfied, or if more than one of the condition is satisfied, then it will certainly become impermissible avoidance arrangement. Subsection 2 says an arrangement shall be presumed unless it is proved to the contrary by the SSC to have been entered into or is carried out for the main purpose of obtaining a tax benefit. If the main purpose of a step-in or part of the arrangement is to obtain a tax benefit. So even if it is not about the whole arrangement, but even if one step of that arrangement, the purpose is to get the tax benefit, then also the arrangement may be referred as impermissible avoidance arrangement. Now, when we go to Rule 10U, which is given the Rule 10U in relation to Chapter 10A, it says the provision of Chapter 10A shall not apply to an arrangement where the tax benefit in the relevant assessment year arising in aggregate to all the parties to the arrangement does not exceed a sum of rupees 3 crores. So if the benefit in aggregate to all the parties is less than 3 crores, then the Chapter 10A provisions would not apply. So now you can see, that it's not about one party. Rather, one needs to see that the parties which are there in the arrangement, what is the total tax avoidance which they are doing, and that needs to be reported in the clause 30C. So if we go slightly up, see this. Just so if you see clause B, part B of clause 30C, it very categorically says, if yes, please specify amount of tax benefit in the previous year arising in aggregate to all the parties to the arrangement. So if you ask me practically, the application of clause 30C would going to throw a lot of challenges. First of all, to understand impermissible avoidance arrangement, whether some arrangement is impermissible or not, whether it will fall under Chapter 10A or not, is not an easy task. And then to say, that we need to report in an aggregate is again a tough task. Now, when we go to Shom committee, the Shom committee has again said that GAR is not a easy thing. So let me read what Shom committee said. I welcome my friend Advocate and CA Gaurav Gupta ji. He has joined us. So once I am done with my presentation, Gaurav bhai will come and discuss the provision relating to GST. So what Shom committee said, the implementation of GAR may be deferred by 3 years. This report came in 2012 on administrative grounds. GAR is an extremely advanced instrument of tax administration, one of deterrence rather than for revenue generation, for which intensive training of tax officers who would specialize in the finer aspects of international taxation is needed. The Shom committee also appreciated or observed that GAR is an extremely advanced instrument of tax administration. And the same thing when we go to our own guidance note, we find uh, it says, from the discussion above salient features of the GAR, it will be noted that the provision are complex, and before an arrangement can be considered to be an impermissible avoidance arrangement, various conditions have to be satisfied. While concluding whether an arrangement is an impermissible avoidance arrangement, it is necessary that tax benefit arising in aggregate to all the parties should be rupees 3 crores or more. The main purpose of these impermissible avoidance arrangement itself is an opinion and calls for examination of the tax benefit arising to the assessee and to all the parties to the arrangement. So this is what guidance note is saying. So apparently, if you wish to report under clause 30, first of all, you need the books of not only of your clients, but the books of all the parties involved in the arrangement, because what you need to report is the aggregate. Second, the law itself is a complex. What we need to report under tax audit is true and correct position, and not true and fair. So when it comes to opinion, whether the arrangement is an impermissible avoidance arrangement or not, it is more of an opinion. And what I remember, the idea behind is, if let's say you are more than 50 or 70% sure that yes, the arrangement entered into by your client is for the purpose of tax avoidance, and the benefit to your client is more than 3 crores, if the benefit to your client is less than 3 crores, then certainly you cannot report, because in aggregate the benefit should be more than 3 crores and you do not have data of other parties involved in the transaction. But let's assume the arrangement is in front of you, and that this arrangement is only for the purpose of avoidance of tax, and the benefit which your client is getting is more than, I will request Rajesh ji to please put yourself on a mute mode. If the benefit which your client is getting is more than 3 crores, then certainly, because you have access to the data, you are more or less certain, you are more than 50% certain that yes, this arrangement is for the purpose of tax avoidance, plus the benefit which is coming to your client is more than 3 crore. In such a case, you can report the transaction under clause 30C or the arrangement under clause 30C. And such arrangement should have been entered during financial year 21-22. If that is not the case, you can simply say that yes, your assessee has not entered into impermissible avoidance arrangement. Further, let's see what guidance note has to say on this. I personally feel guidance note is very important. Let me go take few of the paras which are important. So just give me a moment. Let me open the guidance note. I trust my screen is visible to all of you. So 56.13, we have already gone through. It says, from the discussion above salient features of the GAR, it will be noted that the provisions are complex, and before an arrangement can be considered to be an impermissible avoidance arrangement, various conditions have to be satisfied. While concluding whether an arrangement is an impermissible avoidance arrangement, it is necessary that tax benefit arising in aggregate to all the parties should be rupees 3 crores or more. The main purpose of this impermissible avoidance arrangement itself is an opinion and calls for examination of the tax benefits arising to the assessee and to all the parties to the arrangement. So if we read 56.13, apparently, the guidance note says, is my screen visible? Can somebody confirm? Radhika is saying
Yes,
screen is.
yes, sir. To me, it is visible.
Thank you, Deepak. Radhika, to other it is visible. I think you need to check your settings. So, what Institute apparently wishes to highlight that it is simply not verifying or auditing the figures. It is indeed giving the opinion and opinion whether the arrangement which taxpayer has entered is impermissible or not. Uh, and we have seen the Shom committee report. It talks about that it is highly advanced. It needs training. Uh, so until unless the chartered accountant who is working on the tax audit is pretty much sure that the arrangement of the client is actually for the purpose of tax avoidance, and we have seen the difference between tax planning and the tax evasion. So first of all, it should not fall under tax evasion, it should not fall under tax planning, it is falling under tax avoidance, and you are sure that yes, it is tax avoidance mechanism, then probably you can report. Similarly, all the elements or conditions specified in section 96(1), satisfaction of which at least one is required to be fulfilled. So there are 4-5 conditions which we have gone through. Then it says, for the reasons the Act also has laid down elaborate procedure and authorities interested to higher authority and not to the assessing officer. So everywhere, the language, if we read of the guidance note clearly says uh, the conclusion that the particular arrangement is IIA is certainly a complex thing. So where the tax auditor has been provided access to books of accounts and records of other parties to the arrangement, he may be able to decide an IIA and report accordingly. So the first question comes, do you have the access or you do not have access to records of other parties to the arrangement? If the answer is yes, probably you may be able to comment upon whether the arrangement is IIA or not. But I think in most of the cases, one may not have access of records of other parties until unless you are a group tax auditor and you have the documents available not only of one group company, but let's say of all the group companies, then probably one will have, being the access of all the parties to the arrangement, one may be able to comment. Otherwise, the things may be slightly on the tough side. In light of the above, the tax auditor should consider these aspects while reporting under this clause. Further, Form 3C as well as Form 3C require tax auditor to certify that the particulars given in Form 3CD are true and correct. So this I have highlighted earlier. Now let me take you to the disclaimer which Institute wants us to give if we are not able to comment. So he should make an appropriate disclaimer in respect of reporting under clause in Form 3CA or Form 3CB as the case may be. The tax auditor in his report may comment as suggested below. In the absence of access to the books of accounts and other records of various parties to arrangement, and when want of elaborate investigation beyond ordinary process of audit involved in determining whether the arrangement is an impermissible avoidance arrangement, and in determining the tax benefit in the assessment year relevant to the previous year under audit arising in aggregate to all the parties to the arrangement, we are unable to determine the view of the assessee regarding its entrance into any impermissible avoidance agreement as contemplated under section 96 of the Act during the previous year. So it says if you do not have access to all the records and because of the investigation that is needed, one may put this disclaimer in the with regard to Part A in Form 3CA or 3CB, whichever is one is filing. However, if we go to para 56.15, the institute does suggest where you need to report. So the first case is, where in some previous years, some particular arrangement of the client is already decided by the panel, by the principal commissioner or commissioners or approving panel as IIA. If that arrangement is already decided or upheld as an IIA, then whatever the income is arising from that arrangement can be referred in clause B, and wherein, in the next part it says wherein the reference has been made in respect of such some arrangement, then the transactions regarding such arrangements can be reflected in clause B. So this is what guidance note is saying. So very frankly, very safely, the one is coming out from clause 30C. So until unless, you have all the data of all the parties, and you have done the thorough investigation, if these two conditions are satisfied, probably then you would be able to comment whether something is impermissible avoidance arrangement or not. Secondly, if the case has already been referred, the case has already been in the previous year, some arrangement has already been concluded as the IAA. In such a case, you may say that, this arrangement being IAA, I am declaring the tax benefit arising during the year in this IAA in my clause B of 30C. Or if the agreement or the arrangement has been referred to the tax authorities, by the tax authorities for the higher level of investigation, you can also give disclosure regarding such arrangement in your tax audit report. This was on clause 30C. I trust, I'm able to give some clear understanding about clause 30C. I know GAR is pretty complicated topic, and not only the guidance note, but also the SHOM committee report talked about the complexity involved in the GAR, and they talked about the special trainings to the officer. So maybe sometime, we may do a dedicated session on GAR. Hanji sir, Atmaram ji, please unmute yourself.
Yeah. हाँ जी, इसमें 2-3 बातें थी जो मैं पूछना चाह रहा था। तो ये जैसे 3CD बनती है, ये अपने बनाते हैं, क्लाइंट बनाता है। अपना पार्ट तो नहीं है ना जी बनाने का?
नहीं, अपना तो नहीं है।
हाँ, तो जब क्लाइंट है, वो क्लाइंट 30C में कभी भी नहीं लिखेगा कि भाई मैंने कोई अरेंजमेंट करा है। पहली बात तो वहां तो ऑलवेज ही नो होगा।
हाँ जी।
कौन सा क्लाइंट प्रैक्टिकली लिखेगा कि हाँ जी मैंने अरेंजमेंट कर रखा है और मेरी चेकिंग करो आप? तो ये क्लास का इररिलेवेंस ही हो गया ये इनडायरेक्टली। भाई ये सीए के ऊपर लाइबिलिटी डाल दी रिपोर्टिंग की, दैट इज फाइन, नो प्रॉब्लम, बट क्लास इटसेल्फ में तो ये आ ही नहीं सकता ना जी। प्रैक्टिकली ऑलवेज नो आएगा। कोई भी क्लाइंट इसमें नहीं लिखेगा कि हाँ जी मैंने अरेंजमेंट कर रखा है, मेरी चेकिंग करो। नंबर 1 तो ये मेरा अपना व्यू था। और दूसरा इसमें मैं ये कह रहा था कि जैसे जहाँ पे 3 करोड़ से नीचे है वहां पे तो सिंपली नो ही लिख के अपना काम हो जाएगा, या डिस्क्लेमर फिर भी देना है?
सर अगर 3 करोड़ से नीचे है तो वो इम्परमिसिबल अवॉइडेंस अरेंजमेंट बनेगा ही नहीं, तो 3 करोड़ से ऊपर तो आना ही चाहिए।
बनेगा ही नहीं ना। भाई अपने छोटे क्लाइंट जैसे है जिनके सारे खर्चे ही 2-4-5 करोड़ के अंदर में आ गए, या कोई ऐसा अरेंजमेंट ही लगता ही नहीं, अपेरेंटली आप 10-20 साल से ऑडिट कर रहे हैं उनकी, तो उस केस में तो सिंपली नो लिख दे, क्लाइंट ने नो लिखना ही है, और हम फिर उसमें क्या डिस्क्लेमर है?
उनमें तो प्रैक्टिकली वो तो आईए ही नहीं बनाना सर। फिर मान लो कोई मुझे टैक्स अवॉइडेंस दिखता भी है, बट अगर उसमें आपको लगता है कि मैक्सिमम बेनिफिट 20-25-30 लाख रुपए का होगा, मतलब 3 करोड़ से कम होगा, तो वो तो आईए बनेगा ही नहीं।
बनेगा ही नहीं ना सर। फिर तो उसमें अपने को देने की कोई जरूरत नहीं, नो उसने लिख दिया, फिर ये डिस्क्लेमर की जरूरत नहीं है ना, सिंपली फिर तो अपन कुछ साइलेंट रहेंगे ना उसमें।
साइलेंट रहेंगे, नो लगा देंगे। आपकी वॉइस ब्रेक हो रही है सर।
कंफर्म करके जरूरत है फिर
आपकी वॉइस ब्रेक हो रही है सर। हेलो,
पर मैं होगी सारा अरेंजमेंट कर रखा, बस यही सब मिशन कर रहा था मैं।
हाँ जी, हाँ जी। एनी अदर क्वेश्चन ऑन गार? You can unmute yourself if you have any question on GAR, and then ask your question. Okay, so just give me 30-second break so that Gaurav Gupta ji can join us, and we'll start discussion on section 44 or clause 44. Welcome back, friends. That I have with me advocate cum CA Gaurav Gupta ji. Gaurav Gupta ji is a very renowned GST practitioner who is practicing in the at the High Court level also and representing various clients. So I felt, I think we would not have a better person than Gaurav Gupta ji to speak on clause 44. So not taking much of a time, over to Gaurav bhai for discussion on clause 44.
Thank you, Gaurav. Interestingly, I was also, surprised when Gaurav called me for the discussion on clause 44, which is a part of a tax audit report. Usually, a practicing chartered accountant who is filing these kinds of reports is supposed to. But I think the whole perception, the idea of what Gaurav was wanting to understand was that why this particular requirement has been placed. How is it being correlated by the government with the GST data per se? And how do we perceive each and every column? Because though the column relates to income tax, though the reporting is wanted in income tax 3CD, the terminology which has been used has to be borrowed from the GST statute. Now, with all these complication, let me admit, my dear friends, that this particular column is not something which is
विनय जी, ये चलते चलते बंद हो गया स्पीकर. Fail to detect.
sorry, I was when
Clauses, different clauses.
so when I'm so sorry, friends, but when your extempo, the flow breaks whenever somebody interrupts in between. My apologies.
The meaning from the GST.
Right, and more than that, the problem is that is the reconciliations possible between this particular clause 44 and the GST returns which are being filed by the various SSC. At the outset, the whole idea of clause 44, which I could gather from the 3CD form, from what our institute has given under the guidance note, is to sort of divide the entire expenditure. Now, the key word is expenditure. I'm parking it for a moment. The word is expenditure into the expenditure from registered suppliers and unregistered suppliers. So if we look at the first instance, what is expenditure? My dear friends, mere accrual entries are not expenditure. And more importantly, the entries of expenditure, which are supposed to be reported, is very clearly written by the very nature which has been mentioned, expenditure in respect of entities registered under GST or not registered under GST. So if there is an expenditure which you have procured from another entity, then only it needs to be reported. Otherwise, it is not to be reported. Number two, what is expenditure? Expenditure in its common parlance has been meant that any amount which is actual expended. So if I'm creating a sinking fund, if I'm creating a depreciation, these are not expenditure. They are more of appropriations or allocations or blocking, or you can say marking certain funds or part of profit towards a particular purpose. So number one, expenditure, it has to be an amount which is actually expended. Number two, the reporting is only limited towards the expenditure which is from the entities registered under GST. The third question which comes on the very outset, when you say registered entities under GST, GST statute, section 25 of CGST Act, section 8 of IGST Act, it creates a deeming fiction that every registered unit or every establishment of the same person in different states will be deemed to be distinct persons. I am aware, every one of you know that this particular distinction is there. Now, my dear friends, whether this particular column, this particular distinction, should we need to capture this into this particular table, meaning thereby, I am making an interbranch supply of goods and services. I am paying taxes also, I am taking ITC also. Should I report that particular amounts into clause 44? If I look at the intent of clause 44, income tax does not want that. Income tax is not looking towards that, but from the very language, in respect of entity registered under GST. So I have incurred expenditures, I have received, but the word expenditure, as I said in the beginning, The word expenditure means there has to be a distinct person. The amount need to be expended. When I'm only making a stock transfer, in my humble opinion, the amount is not expended. It cannot be called an expenditure. Though from the GST perspective, it will be a deemed supply, the valuations will be deemed, and taxes will be payable. So my first humble submission, that is my opinion on that, that this particular line item of inter-unit supply of all the entities under the same PAN should not be reported under this particular table. Number one. Now, when I say it has not to be reported, sir, then what is the purpose of this table? You look at from this particular reconciliation from two perspectives. Number one, the government wants to focus on still how many of our assessees, taxpayers are out of the ambit of GST, and where they will try to gather that information from the column number 7 of clause 44, which says expenditure relating to entities not registered under GST. So for example, my P&L, I am taking maximum procurements. I am totally, let's say I have a turnover of 50 CR. I am taking 48 CR from registered entity, 2 CR from unregistered entity. I think the government will be happy to see my P&L. There is nothing which they need to dive into it. But suppose the figures are 25 CR and 25 CR. Now this becomes an interesting case for any ITO to understand or to call for the information that how can a person with so huge an expenditure from unregistered GST taxpayers is having a procurement. Are those persons not required? So the indirectly the data of those unregistered person may be gathered by the department from this particular column. That may be the first intent. Second, that is for the recipient itself. Government wants to understand the amount of purchases which you are declaring in GST. Is it matching with the amount of expenditure you are putting in P&L? Very simple to say, very tough to reconcile. Let me put it very clear. If that is the intent, if the second intent we see, I can assure every one of you that particular reconciliation cannot happen through this particular table. Now, why that cannot be happening? Let me put it one by one. Number one, the table itself and the guidance note also clarifies that they are not looking at a head-wise reconciliation. So they are not looking, okay, what is the expense in advertisement? Registered, unregistered. Not looking at it. What they are wanting? Total expenditure in a single line item. If you look into the guidance note, they suggest that you should have a back working where there is a head-wise bifurcation. आपके पास आपकी working के अंदर expense-wise bifurcation होना चाहिए. But when you are reporting into 44, the clause 44 does not call for head-wise breakup. It is only talking on a consolidated figure. So number one, how much of the amount of expenditure which is appearing in P&L and the amount reported, that itself will not match. So there should have been a column given by the department which should say, number one, which is covered under this table, number two, which is not covered under this table. And then that could have been reconciled with your P&L, which you are reporting in income tax only. Number two. Now, somebody can say, sir, it is very easy. Whatever I am procuring from registered taxpayers other than composition supplier, that can be verified from my 2B. Agreed, my dear friend. That is the ideal scenario. But tell me one thing. What about the credits which you have to avail in 21-22, but you have availed in 22-23? What is the due date? That is 20th of November 2022 for 21-22. Now, if that is the scenario, if that is the situation, I am availing, I have a total credit of, let us say, 10 CR. 9 CR I have availed of 21-22 and 21-22. But 1 CR I am availing in 22-23. Now this 1 CR, though it will be forming part of clause 44, it will not be reflected in my 3B. So my 3B credit will be, if government try to reconcile this on a broad level, will be lesser by 1 CR but which I can legitimately claim in 22-23 in 3B in GST. I hope that breakup, that liberty of GST and availment in the next year is clear to everyone. Similarly, there will be credits of 2021 which you have availed in 21-22. Now that particular figure will also not be reconciling with this particular table. So if someone is intending that this matches with my GST return outrightly on a prima facie level, sorry sir, that will not be there. So I think every chartered accountant need to have a detailed working which is available with him between GSTR 3B ITC and this clause 44. Now there will be one huge item which are ineligible ITC. So I have purchased a car, the car has GST. So that particular expenditure will be reported in the column of expenditure relating to registered entities, column numbers 5. But it will not be availed in my GSTR 3B. So again, there is a difference. So if that sort of reconciliations we want to maintain, the quantum of work which is required for 44 is huge. So let me now come step by step. I have told you the idea, I told you the problems on a very broad level that don't take it for granted this will always match with your 3B. Take it for granted that this will never match with your 3B and reconciliation should always be available with you. Now, on the first piece, what is not to be reported? Number one, at the outset, I told you, in my humble opinion, it's a personal opinion, inter-unit supplies will not be reported. Number two, amounts which are not expenditure, for example, bad debts, forex, foreign exchange fluctuation, loss or gain on assets, provisions, schedule 3 items will not be reported. Now there comes another question that sir, schedule 3 has 9 set of items, 3 of which securities supply or purchase, number 2 land sale or purchase, number 3 building after completion sale or purchase of that. These 3 items have been specifically included in section 17 subsection 3 as exempt supply. So should I report those particular expenditure here? My dear friend, even though that is reported in 17 subsection 3, but that is for the limited purpose of ITC reversal. So these 3 items, in my humble opinion, again, since they are not forming part of the very definition of the term exempt supply, which has been provided to us under section 2 of the CGST Act, very precisely section 2 subsection clause 47, you are not supposed to include land, building, securities also within this. Sir, what about salaries? No, sir, don't include it because that is again neither the supply of goods nor supply of services. So that can also be taken out. So all those particular items which are appearing in schedule 3, all the provisions which you are making at the year end, depreciation, allocation funds, sinking funds, foreign exchange fluctuations, bad debts, all of these items are not to be made part of this particular table. Inter-unit supplies need not be made a part of this particular table. But yes, once you're making your workings of your P&L headwise, kindly park them into a separate column that these items have not been reported and therefore these items should be produced whenever they are being called. Next question which comes up. Sir, what about last year provisions which we have made in the balance sheet, but the expenditures have been incurred this year? I hope I'm very clear in your question. So in income tax, you have made provisions last year. Invoices came this year. So my dear friend, those particular invoices need to be reported in clause 44. Now, everybody of you are very clear why this cannot reconcile between income tax and GST. Because in GST also, you will be taking those credits this year. Those invoices are raised this year. So provisions made last year per expenditure incurred this year will be included within this particular table. So this will deviate from your current P&L figures which are reported. So for example, I have made a provision of 90 lakh rupees in a particular expenditure last year, for which I have received invoices this year. Clause 44 reporting will include that 90 lakh rupees of expenditure, but my P&L will not include that 90 lakhs of expenditure. There are some items which are very peculiar to GST credits. Let me take up one other example. Rule 37, you are supposed to reverse your credit after 180 days. Whether it has to be done or not done, I'm not going into the merits of the case, though we have very good case that some people who have not done it can still fight for it. Leaving that apart, does Rule 37 need to be reported here? No, sir. It is not an expenditure. It is merely a reversal which I made and reavailment of that particular expenditure. So Rule 37 again will become a point of difference between your 3B and your clause 44 or P&L, as the case may be. Goods in transit. I am taking goods in transit in P&L, but I'm not reporting that. Neither maybe 2B might not have, or for that matter, GST credits are not there in 3B. Again, that will become a point of distinction between this particular table and my income tax return. What about consignment stockist? This particular table of a consignment stockist will never match because his total income will be the commission income. But if you look into his GST return, that will be having huge expenditure towards procurement of goods. So for example, Gaurav ji has appointed, Gaurav ji is in Delhi, I am in Mumbai. I am his consignment stockist. He is sending 2 crore rupees of goods to me every month, and I have to sell them in Mumbai and I get a 5% commission. So my total procurement expenditure in terms of my GST reporting would be 24 CR. But since I'm getting a 5% commission, 10 lakh rupees per month, for my income tax purpose, the entire P&L is of rupees 10 lakhs. The entire turnover is belonging in income tax of Gaurav ji. So these kinds of questions, these kind of issues will definitely crop up before you once you start preparing this particular tables. And take my words, my dear friends, I have found that many of the assessors have not yet started preparing this particular clause. The moment they are preparing this particular clause, it does not has to be taken lightly. There is a lot of gaps. Now let us look into it one by one. There are 7 columns which are being called, where information is called by the government. The first one is serial number. If you want to report it into multiple head, that option is available to you. But as per the guidance note also, and as per my understanding also, not required. You can do it into a single consolidated manner because the name of the head is not, the column of name of the head is not there in this particular table. Number 2, the title itself says total amount of expenditure incurred during the year. Now, the word expenditure, I've already told you, last year provisions expended this year will be included this year. This year's provisions will be taken out. A lot of items which I've already spoken, not reiterating for discussion again, those will be taken out. So first of all, total expenditure reconciliation should be made by you. Income, like the way we are making it for income accrued, income due, all those things now has to be made for expenditure purpose also. That is how we arrived at column number 2. So from my P&L, I will subtract current year provision, items not to be included for the purpose which are not expenditure, inter-unit transactions, if at all they are included, plus I will also add up last year's provision for which expenditure has been made this year. Then I arrive at a total expenditure incurred during the year. Coming on to column number 3, items where goods or services which are exempt from GST. Now this is talking about, very interestingly, goods or services which are exempt but procured from registered entity. So I am a supplier. I am dealing both in open bags of supplying atta in open bags and also in small packages. As you are aware, very recent controversy, pre-packaged commodities including atta made taxable under GST. So that is a purchase from the registered supplier. But if it is a open atta, then I'm supposed to give you my bill of supply. Then it is a exempt supply from a registered supplier. Many a times what we have seen is when the registered supplier is supplying an exempt supply, is issuing a bill of supply, they fail to mention the GST number. Now, in that particular case, my declarations, can they be treated wrong? No, sir. What you have to see, because this is also not coming in your 2B. You have no way to find out whether that person is registered or not, and you are not too supposed to be the investigator. फिर तो एक एक बिल के ऊपर आपको चेक करना पड़ेगा कि गलती किसकी थी, मेरे को रिपोर्टिंग सही करनी है. Not the intent of law. Simple. If your bill has a registered number, a GST number, tell your accountants, guide your clients, please mention the GST number in your accounting system. So later on, whenever the purchase summary will come out, all the places where the GST number are mentioned, that detail can be segregated from all the bills where GST numbers are not mentioned. Number one. So if invoice contains a GST number and the supply is exempt, please put it in this particular column. Very, very important for people who are dealing with, number one, medicines. There are a lot of vaccines, medicines which are life-saving and which have been exempted. Number two, there may be persons who are dealing in a lot of exempt supplies per se, hospitals, for instance. So many of their supplies will be maybe from a registered supplier. Number three, entities where they are dealing with advocates or people who supply under reverse charge. Very tough to gather. So if a GTA is registered, how will you get to know? You get a consignment note. That consignment note might not have a GST number. For example, I'm an advocate. If I am giving you a proper invoice with the GST number and reverse charge, then only your records can make out that I am taking a supply from Gaurav Gupta, who is registered. Now, second question, sir, all the services which are under reverse charge, should I report under this particular column? Meaning thereby, my supplier is not paying taxes. I have to, for example, GTA, for example, sponsorship, for example, advocates. I have to pay tax. Now, tax has been paid on that particular thing, but under reverse charge. So should I report it into the registered entity column, or should I report it under the exempt column or unregistered? My dear friends, in those particular things, my humble submission would be, reverse charge has not to be seen. What has to be seen? Whether the supplier is registered or not. So I'll give you a very small example, import of goods. My whole business is I'm importing 50 crores of goods and I'm selling in local market. Now I am paying at the time of import, I'm paying at the customs station entire IGST under reverse charge. I am the person. But if you ask me from clause 44 perspective, there is no column for imports. So is my supplier registered? The prima facie, by all technical means, the answer will be no. The title is very clear. Expenditure in respect of entities registered under GST. Is my importer, the person who is exporting goods, registered? Answer is no. So where that will go? That will go in column number 7. But then the officer who is an income tax officer, or for that matter, if this data mining is happening by some computer, very interestingly, they will definitely pick up that case. This particular person is having a lot of procurement from unregistered supplier, 100 crores of rupees, and he is, how is it possible? Now, my dear friend, if I'm reporting in 7, then also there is a problem. Now, if someone suggests you, please report it in 5, where since you are paying under reverse charge, then this will not tally with your 2B on a very prima facie level also. Again, there will be a huge gap. Again, both the departments will take up the inquiry. Very vague. You can't interpret this data of a taxpayer at the back end without calling for a detailed investigation and think about the number of notices which will flow when we fill. Now, when I put up a question, I'll also put up my view. My question was, imports ko kahan par dikhana hai? Mera humble straight view hai, table number 7. My supplier is not registered. I am true to what I'm telling you in my table. You have not given me any column to tell the balance of the true part. That is the problem of the government, and we have to sort of face it. Next question. Non-taxable supplies. Sir, what are non-taxable supplies? All the petrol pumps. Your diesel, petrol, alcohol for human consumption, ATF, all of these items are still outside the ambit of GST. So supply of alcohol, liquor for human consumption, supply of petroleum, crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. Now, if you have a lot of slips from a petrol pump, have you ever seen a GST number on those particular petrol pump slips which are bill of supplies? Petrol slips jo parchiyan hoti hai. I can tell you 90% or 95% of the petrol pumps are registered. But since you do not have a GST number, again, you will be fixed into a dilemma whether to report it in column number 5 or column number 7. My simple rule remains, if my invoice has a GST number, put it in 5. If it is not, put it in 7. In case of petrol, since it is exempt, you put it in 3 or you put it in 7. Right? Moving further. Reverse charge, I have already spoken. Inter-unit procurements. We are not reporting, as per my humble opinion, that will always remain a gap in this particular table. Now, my dear friend, there are one more important point, which is entities which are falling under composition scheme, column number 4. Again, this data, the GST number will be there, but you all will be having an invoice where there will be no GST charge. A composition supplier cannot charge a tax, and therefore you have to be very careful during your accounting that this particular column does not hit column number 7. It goes into column number 4. Though there is no ITC which you are availing, and number 2, there will be no tax shown on the face of the invoice. So column number 4 again requires a lot of exercise on the part of every chartered accountant and definitely the client. Coming forward, one more thing which I was wanting to sort of put before all of you. You are aware that the credit can be taken for 21-22 up to mid of November this year, 20th. Now, the chartered accountant is signing the report on which date, sir? He's signing the report on September 30th at max, if I'm not wrong. The audits can happen. So
1st October also, wherein the SSC is entered into international.
Right. But that is all before 20th of November. Now, a question might crop up that the invoices on which ITC is still not taken for 21-22, but they are appearing in 2B. Are they expenditures of that particular person? Yes or no? In those particular cases, if such a kind of a gap between 2B and your PNL are there, and the assessee is assuring you that this particular expenditure will be taken. So if it is reported last year, kindly please take an undertaking. If it is not reported in that particular year, please do not bother, because that PNL does not contain that expenditure and income tax. So if a expense is not booked, and we have seen there are a lot of assessees who are still reconciling. Galat chada, kisi ne galat GST number pe 2B mein entry kar di. So a lot of people are still reconciling. If you get those particular kinds of gaps, take appropriate management representation from the client. Coming on to the next and the last part. छोटा सा टेबल है सर, बनाने में जब बैठेंगे, it will be definitely a mammoth job, I can tell you. First of all, division, then segregating all these items, and third, keeping up the backup papers. Because tomorrow both GST department and income tax department will definitely be calling a reconciliation from this clause 44 from you. Last, before I conclude my deliberation, when we are filling this particular table, even though headwise breakups are not required, I have already suggested that we make a headwise. One last question which everyone can have in his mind is whether capital expenditure need to be included in this. Sir, the expenditure has not been restricted to revenue expenditure only. So capital expenditure, which is going into your fixed assets, which is not a part of your P&L, will also need to be reported in clause 44. So please keep that also in your mind. This particular item might get missed because a lot of fixed assets, when you talk about big companies, they come into existence, many of which will also be lying in CWIP, capital work in progress. All of these things are the expenditure of a particular year. They might not result in a fixed asset. They might not result in a particular expense in that year. Prepaid expenses, again, expenditure in that year, need to be reported in clause 44, will not be there in P&L. So my dear friends, a complete expenditure, the cash flow or the fund flow rather, what I would prefer, should be matched to this particular table. Yes, I might be sounding unreasonable, demanding excessive working, but that is how what is government is wanting us to work on. It is not one table where I would just simply put my advertisement expenditure, divide or take out whatever I have taken in the credit from 2B and report the balance in expenditure, not from the registered taxpayer. Every reporting will be having a repercussion and a reconciliation will be called upon. Now, one very interesting question which comes up in my mind, where I also want Gauravji to contribute. I have made errors in this report. Now, this is a very simple question, though our intent is that we are reporting 100% correctly. Inadvertently, there is an error which has crept into this particular report. What is the repercussion or penalty which can come up under income tax on this particular aspect? In GST, there will be none. I can assure you that. But from income tax perspective, I think only a general penalty can maybe imposed by the officer. Something absolute addition in the income cannot take place. But being a part of the Form 3CD, where a chartered accountant is supposed to certify the true and correct view. From that perspective, yes, I think a lot of responsibility has been casted on all the chartered accountants. Keep your backup papers, keep your workings. Do not feel lost in case it is not matching with 2B. I can tell you, no one has anything which will definitely match with 2B. अगर कोई 2B से मैच करा के इसको भेजेगा तो वो गलती करेगा. 2B से कभी मैच नहीं होगा. आपका GST अलग चलेगा, इनकम टैक्स अलग चलेगा. दोनों के बीच की रिकंसिलिएशन जरूर प्लीज बना लीजिएगा. We are sitting on 23rd. We are very late to give this kind of an idea, but I think that is the best advice. That is the best suggestion I can share with you, my dear friends. So I think with this, I put rest to my deliberation. I thank you all for being a patient listener as always. And definitely thanks to Gaurav for making part of this particular deliberation.
Thank you, Gaurav. I think more important is to prepare a reconciliation with the financials, the balance sheet, the profit and loss account, which we are submitting to the income tax authorities. Because the expenditure is getting captured either in the balance sheet in form of capitalization. Right. So it may happen that I have purchased some machine which I'm capitalizing. It may happen that, as you rightly said, that some item, some expense may be going into CWIP, which is again going to the balance sheet. It could also happen that there is a provision in the previous year.
Very interestingly, there will be expenditures which are netted.
Correct. So all those things, so in my humble view, reconciliation is important, and if any mistake can happen, which can certainly happen, being we all are humans, we have an option to correct the tax audit report. So in such a case, if it is within the permissible limit, then one should try to do the rectification to the tax audit report. Whether addition will happen or not based on the amount reflected in clause 44 is a matter of litigation. Certainly, the officers, in my humble view, may call for an information or an explanation, asking for justification. But yes, if the justification is provided well, and if the error is not material, then probably the decision will come in the favor of, the decision should come in the favor of
more notices, more faceless assessments. I think the government is giving more work to the professionals day in, day out. That's what I can say.
So now let's, if any one of you has any question on these two clauses which we discussed today, clause 30C and clause 44, please raise your hand and then we will unmute you and you can ask your question. So we have got one question in chat box. Sayam is asking, can clause 44 of tax audit be equated with table 14 of GSTR 9C?
See, that particular table is still in abeyance. So you're not preparing it there. They are wanting it from you here. But I can still tell you there are items which are not reported even in 14 and reported in 44, and there can be a vice versa situation also. So from my humble perspective, look at them independently, differently, both of them, and prepare your reconciliations differently for both the tables, because the language which has been required in GSTR table 9C, table 14 and clause 44 are different. So my humble view is they both will be having different results.
Any other question? You can unmute yourself and ask the question. So let me see if we have any question on the YouTube.
Ajay ji is saying reporting of IC sale purchases. Can we just look at that question?
So we have question from C. Ajay Gupta, and the question is regulation clause 44 on clause 44. What about reporting of IC sales, purchases, and futures and option transactions? Since guidance note say no reporting of Schedule 3 transaction.
Ajay ji, we are number one. There is nothing called high C purchase per se, because what we will be taking is it as an import only. I am a purchaser who have bought on the high C, and therefore I will be the importer of goods on record, IOR. So in my humble opinion, I've already dwelled on this particular topic. Imports will be reported in the purchases from unregistered suppliers. It will be number two. So what is not included is high C sale in Schedule 3, not the imports. Number two, future and option, definitely, sir. Securities are outside the ambit. I have already spoken about section 17 subsection 3. Even there is a mention of inclusion in the exempt supply for the purpose of reversal of ITC. Still, in my humble view also, securities and future and options will not be included for this particular purpose, because they are outside the ambit of the very definition of supply.
Next question we are taking from Pawan Goswami ji. He has asked on a YouTube, is 3 crore limit, I think the question is relating to clause 30C on GAR, is 3 crore limit for one financial year or for the whole arrangement irrespective of number of years involved? It talks about assessment year. If we read rule 10U, it talks about assessment year. So in my humble view, 3 crore needs to be seen per assessment year. Now, Amarnath ji, please go ahead and ask your question. Any other question from the audience on Zoom, from the friends on Zoom?
Hello, Gaurav ji.
हाँ जी अजय जी, please go ahead.
सर नमस्कार.
नमस्कार जी.
गौरव सर, एक्चुअली जो मेरा क्वेश्चन F&O के लिए है, उसमें सिचुएशन ये है कि से इन करंट डेज there are many people doing only F&O transactions, and somehow they are registered also with the GST department, whether they are using that number or not. In F&O में सिचुएशन ये है कि F&O per se is exempt from GST, but जो brokerage charges हैं या commission हैं या SEBI charges हैं, they are subject to GST.
Understood.
So now when I prepare a P&L, I use 2 line items. One is F&O sale or purchase, either in net basis or gross basis, and then second line item is brokerage charges, which is charged by the SEBI or some brokerage house. So when I am filling this clause 44, the SEBI charges or brokerage charges subject to GST will come under the registered part.
100% correct, sir.
And those future and option transactions, either on gross basis or net basis, they will go into exempt or unregistered, because I don't know with whom the person I'm dealing this, I'm doing this future or options calls, either he is registered or not registered.
if you look at from the guidance note perspective also, they are speaking about exclusion of Schedule 3.
Right, sir.
Since it is flowing from our parent body, I would suggest we should not deviate from what it has been suggested in the guidance note. But if yes, what you are saying is also perfectly fine, that there will be a huge gap because the purchase of that particular person in terms of securities, in terms of F&O, will not be reflected, and very meager expenses will be reflected in the clause related, purchases or procurement from registered entities. So Ajay ji, I am with you on that, but since I think those Schedule 3 items, including salaries, are suggested to be excluded, it is better that we exclude all of them, and government will also learn it after 1 year that there are more columns which are required in this particular table. So this will be surely amended next year. This year, let's stay with our guidance note. That will be my humble submission.
Sir, continuing another thing that in clause 44, the point number 82.14 of guidance note, it says we have to report total expenditure of P&L in column number 2, that total expenditure column.
Right.
And in rest of the column 3 to 6, we have to report only those expenditure which are covered under GST, either registered or unregistered.
Understood.
So it means that every expenditure like salary or F&O or anything which is not into ambit of GST, that will come in column number 2. But other columns will not have that much effect of those expenditures. So it will create an overall difference in the table.
That we have to live with because of the fallacy or because of the anomaly in the table itself. As
Absolutely.
chartered accountants, we only appreciate when our balance sheet tallies. अगर balance sheet में 10 रुपए का भी फर्क हो जाता है तो हम उसको छोटी गलती नहीं मानते, हम कहते हैं कोई blunder भी हो सकता है. But this is not how the department in the very first year has drafted this particular clause. I will not say that this is a badly drafted clause, but I would say it is an incompletely drafted clause. Secondly, if they were wanting this kind of an information, it is better to flow that from the GSTR 3B rather than making a new column in this particular table. So there are a lot of suggestions which will flow this year. Take my words, Ajay ji. The underlining rule or the rule which we have to follow this year, whatever you are reporting in this particular columns, which is 2, 3, 4, 5, 6, 7, you should be having proper basis, proper working papers for that particular reporting. That should be there, and this gaps will be there. आपको एक नहीं कई मैंने अब मैंने provisions का आपको example दिया. क्या आप column number 2 में provision को include करेंगे? मेरे हिसाब से तो column number 2 में provision आना ही नहीं चाहिए, क्योंकि the word is expenditure.
Correct.
Again, that provision is not an expenditure. It is an amount which has been accrued towards an expenditure. Depreciation, again, not an expenditure. So, though there will be Schedule 3 items which will be reporting in 2 and which will not match with 6 or 7, even though if you will see many of the speakers will suggest, sir, 2 should always match with 6 and 7. My dear sir, it can never match because there is a difference in the very language which you have also rightly pointed out, which guidance note is also pointing out. My opinion also goes with it. So 2 will be having all expenditure minus no provisions, no accrual entries. Number 2, expenditures which are in Schedule 3 will be reported in 2, but will not be finding place in 3 to 7. So non-taxable supplies, etc., will be finding place in column number 3 or maybe column number 7. But Schedule 3 will not find place in 3 to 7. Securities and money. So money exchanges will also be having a problem. Now, there are air travel agents. Ajay ji, I'm giving you another complicated example. They report the purchase and sale of air tickets, which is not in their name, in their financial, which is a totally incorrect way of reporting. They will be facing a lot of problem in this particular reporting for the very simple reason that particular expenditure, what they have expended, is not belonging to them. They have booked the air ticket for their client. There was a circular which was released at the inception of GST by Air India, Ministry of Aviation, which they have withdrawn. When they were saying that the air travel agent, he will be the customer for airline. He cannot be. He is merely an intermediary. Further to complicate things, if you look into it, what will be the treatment of reimbursements, CHAs? He has paid a lot of CWC charges, a lot of detention charges, a lot of cargo handling on the behalf of the SSC. Now, these particular things were never coming into any kind of discussions in income tax earlier. But take my words, Ajayji, these things will definitely come into challenge this year, because whether reimbursements will be coming as an expenditure is one question which every person has to now answer. Is reimbursable amount an expenditure for you? In my humble opinion, no. It is merely an amount which has been given, paid on behalf of somebody else, which I will recover from him. So that expenditure will incur, that expenditure will be reported in his clause 44, not mine.
Correct, sir.
I think
Absolutely.
I broadly remember that if we talk about this, we have a section which talks about related party transactions, that the related party transaction should be at fair market value. So in that there are few judgments which says reimbursements are actually not an expenditure which is incurred by the taxpayer. So we are not required to compute the fair market value of reimbursements for the purpose of related party transactions.
Not even fair market value, the very question of whose clause 44 will be hit by reimbursement, we have to be very careful, because the same expenditure, same amount cannot be expenditure for two different people. Either it has to be two different, it cannot be called a reimbursement, it can be called a contract. So these questions you have to be very careful while answering. You have every right to be wrong, but please, you have to make a basis why that particular decision has been taken by you. Nobody can be perfect in this first year in clause 44, but make your working papers very clearly.
Correct. So we have another question on the
We'll take it as the last question.
Yeah.
I am sorry, but I have to.
So on the YouTube, we have a question whether interest is an expense or not.
Definitely an expenditure, sir. Though this particular expenditure is an exempt expenditure. So if it is coming or flowing from a taxable person or registered person, reported accordingly. If it is flowing from an unregistered person, reported accordingly. So coming from bank, reported in the exempt supply from a registered person.
Okay. So guys, I think we are done with our today's session. Thanks to all of you for joining. Thanks to Gaurav for joining in this session. This session is certainly available on my YouTube channel, which you can go and watch again. So we will meet again on some other clauses of tax audit. You all would be receiving details of the next topic, day and time soon on your email IDs. So thanks a lot for joining. See you soon.